everybody. This episode of Retention Zone sees a comeback, if we can say like that. Yannick Ramcke. Ciao, Yannick.
Ciao, Carlo.
He was guest of episode number 20, almost exactly 2 years ago. He still looks super young, which I'm a bit envious, but okay.
Now keep trying. Here we are again. So also kudos to you to follow through, push through with that series for quite some time. I've heard most podcasts, or the vast majority of podcasts, don't make it until double digits in terms of episodes, but here we are again 2 years later.
So I'm general manager OTT at OneFootball. For people that don't know, enough about OneFootball and what you're doing there, what is OneFootball doing in this phase, maybe, and also the subscription part of it, etc. And in general, how do you think the subscription ecosystem has evolved around that?
Obviously, we as ultimately a platform, that we are doing is in very simplified terms, connect supply with demand. So those who have content, trying to reach, engage, and monetize an audience on the one side, connecting it with the built-in demand on the platform. So the modern football fan on the other side, who ideally is craving such content. But ultimately, what we also sell to the content owner as an asset is, yes, once the install base, which we have worked on for more than a decade to build that. But then equally importantly, our ability to engage and convert those users into customers by putting the right content at the right time in front of the right people. And that is when it comes to metadata enrichment that you can use for further personalization downstream, that when it comes to content discovery, I must admit, also more like pinpoint solutions rather than this from top to bottom holistic approach. But this is where we see from AI perspective on our side the biggest impact. At the same time, we also want to support those creators with content creation. So we have creator tools. You can imagine subtitling, captioning. It's all of a sudden you can just use this as a creator when you publish the content. It's making their job easier. And then even further upstream, we see all the broadcasters, for example, who are running a OneFootball channel. They use AI in the content production. I think automated clipping by now is pretty much industry standard, where you just minimize time to market when it comes to post-match highlights, in-match clips, and so on. So it's across the entire stack, but very interestingly also the very downstream engagement, monetization, retention, where it is a big part of what we are doing, not because we couldn't do otherwise, but we can do better than we did.
But you think in general in the industry, for sure 2 years ago, but also last year, churn was a major issue and a major attention for many people. So the fact that you can retain customer, because this is very important, especially when you have acquired already a lot. So do you think the vibe has changed from what you observe, or no, this is still super important for people that obviously want to turn a profit, want to grow revenues, etc.?
No, for me, churn, and I think for the industry at large, remains the holy grail, the one thing that needs to be solved. Because I think what we have observed, especially as the industry has been in this full customer acquisition mode the past 2-3 years, and the vibe has a bit shifted there from acquisition to retention, from growth at all costs to bottom line profitability, that it's easier to retain a customer than to acquire a new one. I think it's how you can summarize it. And by now that the growth has plateaued because it's quite penetrated, saturated, I think consumer adoption from OTT subscription services has been there now, that the focus shifts from acquisition to retention. But just like you market for customer acquisition, you market for customer retention. It's a cost, but ultimately it's all about engagement, because I think engagement is always a leading factor for monetization. Again, monetization can happen in the form of acquisition/conversion, but can also happen, and increasingly more, in the form of retention. So I don't want to break it down to like a mathematical formula, but if you get, I don't know, an engagement per euro spent on a monthly basis, I think chances are quite high that the subscriber continuously sees value in sticking around for another month. And this is ultimately what a subscription is, right? Like it's like a constant value exchange between value delivered from the service to the consumer in the sense of entertainment, engagement, content, and then the financial value back in terms of the subscription fee. And unless you're on the comfortable situation of having locked in the user for like entire year or like a long-term login, like this reassessment will be done on a monthly basis, which is where then it comes in like you need to prove yourself every single month. And especially as the market is now more saturated, the cost at all growth approach changes to bottom line profitability, that retention becomes more important than acquisition, because acquisition ultimately is just a matter of spending money. Yes, each incremental customer becomes more and more expensive. And at some point, it doesn't make sense anymore if you look at customer acquisition costs compared to lifetime. So at some point, it's not reasonable to spend anymore. But acquisition is a matter of cost. I think retention is a matter then of also pricing, because it's this constant value exchange. The price that I pay, what I do, I get in return in the form of entertainment.
And you see AI playing a role, at least I thought it was a good area in which AI can really improve stuff, not only on the, if you want to say on the front end, but also on the back end. Because all the now with all the sensors that we have in the product, etc., there's a lot of data that not always we know exactly what to do. And I always had this idea that maybe that's one of the way to find patterns, etc., where AI can use, but also that instead of having maybe static dashboard where people like your team, etc., would go there and try to understand segments, etc. One, there is much depth in what AI can extract from those data, and second, even the interface for analysts or whatever you call them could be more AI based and not just going through tables and dashboards. I don't know. I mean, you're in the reality of things, so you have more idea than maybe my visionary thoughts have.
I mean, we have a bunch of ideas. That's a great thing, right? It's now really to operationalize and productize all of this. Again, I think where we start is completing the data, the metadata and all of these kind of things. Even though, again, like the collecting and processing the data hasn't been the bottleneck in the past. And I think we also need to be true to the extent that we could have done so much better without AI even before, in the sense of, I mean, you don't need to be like a rocket scientist to personalize the experience to a large extent already. It's like 80-20, like many things in life. And like some nested if functions already probably would have gotten you a long way in the past when it comes to if that then this, in terms of what kind of content at which point to which people you are surfacing. But I think the biggest difference now is all like from there downstream, like actually acting upon that data. The feedback loops get shortened, the iteration is accelerated. And to be fair, we did know all of this in the past, but it may have also been cost prohibitive to go at that level of personalization, let alone individualization. Now, it's probably not an argument anymore, because it is somewhat scalable, and you can really go and think into cohorts, maybe at some point really on the individual level, to just ultimately drive the unique economics which make or break the business after all.
And
one of the latest bigger initiatives for us at the company, that we built a white label service and solution where we allow pretty much, especially rights owners, so club leagues, federations, to run their D2C business directly on the OneFootball platform, so that OneFootball channels is like their own owned and operated streaming service, but without the time to market, without the cost to market, without the OpEx of running and marketing a streaming service. without building an audience from scratch, but pretty much tapping into the millions and millions that are already on the OneFootball TV platform. And at the same time, you benefit from all the D2C benefits that you would expect. First and foremost, like customer co-ownership. So even though you actually piggyback on OneFootball, you still have a path towards co-owning the customer through sharing personally identifiable data. And all of this was trying to merge like B2B and D2C like in one single solution. So that is like when you ask, okay, like what's been like top of mind, where you may have like adjusted to and based on observations in the marketplace. This is one big factor. The other factor is that we started as an AVOD and TVOD, so we really tried to be and think like an e-commerce platform when it comes to D2C. We were really conversion driven, conversion optimized, one-off transactions. Now we didn't do pay-per-views and season passes because we thought, okay, this is like the best thing that you can do in general, but it was fit for purpose when we thought, okay, we want broadcasters launching a OneFootball channel to supplement their existing core subscription business by gamifying the experience, by thinking really like in funnels, like an e-commerce business with single game transactions, a lot of them actually happening during the game. Now that you want to be also a white label for club league federations to run their entirety of the business on OneFootball channels, you obviously, subscription is still the single most important and powerful revenue model. So we are not only AVOD, TVOD, but now also getting into SVOD, really navigating at this intersection of the three business models. But that's what we are thinking about on the B2B side. On the B2C side, it's really what you see. It's very fragmented. I mean, we try to identify common themes among users and consumers and how they navigate, behave, and engage with digital content. But it's super fragmented. Back to it's not one size fits all anymore. But then again, where AI must be, it's inevitable because it's an imperative to run a successful business, must serve as an enabler to cater to those more fractured preferences, needs, and desires. But again, like technology has always been an enabler of new revenue business models and so on for like the past century. It will be again, and I think sports will be as usual at the forefront of it.
Oh, the one thing you said about the B2B and white label brought to my mind in episode 20, 2 years ago, you identify, I think it was one of the point I remember, a monetization gap. Do you think that's changed, or it's a wider gap or a closer gap from what you have seen now?
I mean, okay, let's rewind in the sense of where I was coming from. I think it was pretty much like the level of monetization between linear pay TV bundle and
Yes.
OTT economics, and on a second part on not every eyeball is created equally, but there are monetizable eyeballs and there are like vanity eyeballs. I think the first dimension of linear pay TV and its economics, looking at pricing, churn, and lifetime, obviously have been much superior to the OTT economics, especially like up until recently when streaming services tried to grow at all costs, as had accordingly a quite aggressive pricing and promotion plans. Now, where they've shifted from top line to bottom line growth, they try to re-establish those economics, which you see especially also on the pricing. I think hiking subscription prices has been all over the place. I think there we have seen for many services a bit of a ceiling now. So I think the other big button to push is advertising. So I expect advertising to be a big topic. Also AI-based advertising, make it more relevant, more contextual, more subtle, but equally performant, will be a big topic this and next year. So this has been one point, this monetization gap between linear pay TV bundle and OTT economics, where again, retention will be the name of the game going forward. But equally important, the differentiation between eyeballs and monetizable eyeballs, back to how today's consumer engages with sports video content. I mean, other people have coined it highlights economy, which is the consumer's preferred way to consume and follow and engage ultimately with the sports entertainment product. Then again, like another thing I believe in is that engagement or monetization follows engagement. So you need to have the engagement first. Then monetization in the past has been inevitable, but since like the forms and kinds of engagement has been so diverse nowadays, this is something that the industry still hasn't fully solved in the sense of, I think it's quite common to read that the reach and the engagement was bigger than ever in the past. But it's like engagement collected across many different forms, platforms, and contents. And a big chunk of it is short form. And yes, today it's at best monetized through ad-based monetization. The question now is, how do you leverage and translate that engagement into monetization? I think the industry consensus right now is that you leverage short form content as top of funnel to drive subscription-based monetization. And I think here the mandate is really to collapse from discovery to engagement and monetization the funnel as much as you can. I think the alternative for the sports industry to look at is, I would dare to say that where there is engagement, there's willingness to pay. So that we may move into, not for the entirety of the market, but for certain subsegments of the market, where also short form can become a paid or like a product worth paying for. It's all about live. It's always about live or as close to live as possible. But industry and consumer trends show that some consumers prefer short over long form. And if it's still live or close to live, then that might be like a product worth paying for in consumer's eye. But all in all, it's about just rebuilding the economics, eliminating the monetization gap. I think we are further along than we were 2 years ago, which you also see like in the financial statements of all the streaming services and so on. But the proof will be in the pudding over the next 2-3 years. But I think we made progress along that one.
Any new retention opportunities that you have discovered in the last few months?
Well, I think it's still anecdotal at this stage, but as data comes in, it might become a more robust theme, is that speaking of also being like a go-to solution for rights owners, so club leagues, federations, what many clubs have now launched are club TV channels on OneFootball. And as you know, like clubs have very little to work with, especially during the season, because all the variable IP is centralized on the league level. So if you look at the club TV propositions, it's primarily made up of full match replays, highlights, some archive content. They try to transform themselves into media companies, so they also have some exclusive behind the scenes content and stuff like that. But nonetheless, it's priced quite aggressively, like $1.99, $2.99, and so on. And what we observe are surprisingly good retention rates, which leads us to the fact that once you achieve the conversion and someone has signed up to such a low-cost streaming service or OneFootball channel, that the cost of canceling, the effort required to actually cancel and all of this is higher than just sticking around for another month. So that, in other words, you can price the streaming service as cheaply or to the extent that the churn consideration is not even a consideration anymore because it's just not worth the effort. So a little bit of an insight when it comes to maybe also retaining someone for another month. I think price is still the single most important input variable for that consideration. And it might be priced as low that it's not worth canceling and sticking around.
Especially like in your case, you have a portfolio of offering. One customer for whatever you have, it's still a customer, which is more important than, if you only sell one thing, yeah, obviously you need to price it accordingly. But especially in your case, a customer is inside the system more than someone that is engaged.
Yeah, I think this is also a bit of an not trade-off, but two perspectives as looking at the same considerations. That obviously we look at monetization, ARPU, and lifetime value on a per user level, while the content owners running a OneFootball channel is obviously interested in like the monetization for their particular item and offering.
Absolutely.
So ideally, these interests are fully aligned. When in doubt and in some circumstances, there's a trade-off. Absolutely.
Absolutely. Va bene. Thank you, Yannick, for your time and as always, very thoughtful and insightful. And good luck for the rest of the year, by the way.
Thanks, same to you. And as usual and as always, a pleasure catching up with you.